All right, hi everybody. My name is Richard.lesperance. I go by the name of my man Richard. Today we're going to be talking about in regards to trading and day trading. What's the difference? Because I thought both of them were the same, but someone told me that they're different. So I think you guys are going to enjoy this episode. Today I have the pleasure to have Adrian Reid. I hope I'm pronouncing your name right.
Absolutely.
Great. So, Adrian, I'm going to jump in right into the topic. What's the difference between the two?
Between day trading and trading, yeah, good question. Because whenever I tell someone I'm a trader, they say, "Oh, you're a day trader." It's like, hang on a minute. I just said I was a trader, not a day trader. So it's a common, assumption that if you are trading, let's say in stocks, I mean, it could be in stocks or in Forex or in futures, it doesn't really matter. But if someone says I'm a trader, most people immediately jump to day trading. And let me define day trading is basically when you're trading the markets, let's say stocks, and you're buying and selling multiple times within the one day. And typically, you're not carrying the stocks overnight, so you don't hold overnight risk. So day trading is very short term. You're typically looking for quite short moves, small profits, but many of them in order to generate your profit, build your wealth. Whereas trading is the more generic term. It kind of encompasses all types of traders. But for me, my style of trading is I use daily charts. I make a decision one time per day. So at the end of the day, when the market's closed, I'll get all of the data, I'll run my strategies, I'll see what's happened, and then I'll place my orders for the next day. And I don't look at the screen during the day. So with day trading, you're looking at the screen all day, watching the charts go up and down, buying and selling, trying to extract an income from the market. Whereas longer term trading, like what I do, it's much more relaxed. You're not tied up staring at the screen all day. And this is why it's probably useful for a lot of your listeners because people who are entrepreneurs, people who have big jobs, people who are trying to work on multiple different projects. You don't have time to stare at the screen all day, so you really don't have time to day trade.
So you say you do one, you don't do one trade a day. You do
No, no, no. I
multiple.
look at the market once per day. So when the market is closed, I download all of the data. What did all of the stock prices do during the day? And I add that to my data history. And then I run my strategies and I figure out what trades I'm going to place for the next day. So I could place many trades for the next day, but I place them all outside of market hours, ready for when the market opens the next day.
So how many trades do you do per day? You
Yeah,
would
it varies a lot depending on what the market's doing. In my account, I trade US stocks, Canadian stocks, Australian stocks, and Hong Kong stocks. And I also trade crypto. And across all of that, I mean, I could very easily place between 10 and 50 orders for the next day. But sometimes it's zero. It just depends on what the market's doing. So I have many different strategies. And if the strategies will only place an order when they're getting a signal from the market, when they're in sync with the market. And so some days it might be zero, but it could be if many of the strategies are firing, then I could get lots and lots of signals.
uh have you done day trading before in the past? No?
I have spent a little time day trading. I must say, not successfully. I did what most people do, which is a huge mistake. I tried day trading when I had a full-time job, and so I was sitting at the computer placing my trades, and my boss would come up, and I'd flick the screen and change things, and then my boss would go away, and I'd look back at the screen, and I'd realize that I had the market had gone against me, so I'd exit the trade, and then my boss would come up, and I want something else, and then I'd place another trade, and then I'd get distracted, and it was absolute nightmare, complete disaster. So I lost a ton of money day trading. I had already been successful trading longer term for quite some years, and when I tried day trading, it was a period of 3 weeks, and I lost 30 grand in that 3 weeks just because I was completely distracted. I couldn't do my job well. I couldn't do the trading well, so it was just hopeless. So yes, I've tried day trading, and typically for most people, I don't recommend it because A, it's too stressful. B, we don't have the time and focus to spend looking at the markets the whole time. And C, longer term trading is just way easier.
There's a little bit of similarity, correct me if I'm wrong. Well, not similarity, but there's some stuff. I know there's a swing trading, position trading. Could you talk to us about that? And I think there's also scalping.
Yes, absolutely. So there's a whole spectrum of, you know, trading strategies and timeframes that you could operate on. At the very, very short term end is high frequency trading. So high frequency trading is what, hedge funds, prop firms do, where they've got supercomputers parked right up next to the exchange and they're placing hundreds of orders an hour, and they're trading really high frequency. And then you come out a little bit longer term and sort of 5, 10 minute charts, and people will be doing day trading. And then a little longer term, people typically refer to as swing trading. And then longer term than that, people typically refer to as position trading, or it could be trend trading, and then eventually you get all the way out to buy and hold and Warren Buffett style. So it's a whole spectrum. And at being a trader, you could be anywhere on that spectrum. And I think one of the most important lessons is to realize that you've got to trade in a way that fits your personality, your lifestyle, and your objectives. I don't like very high pressure, high frequent decisions. Yeah, I like to be more considered and, do the analysis and then make a decision. So the very short term end, like the high frequency or the scalping and those sorts of things, unless it was fully automated, that doesn't suit my personality. Yeah, and the high frequency stuff is fully automated for the funds, but I don't do that sort of work. But day traders who look at a 5 minute chart or a 1 minute chart and watch those charts manually and try and do scalping type trades where you're just taking a couple of ticks here and there, it's very high stress, and it doesn't work for my personality. I prefer the relaxed longer term sort of approach. So it's a whole spectrum of time frames that you can trade on.
Is the startup capital for day trading, someone who's going into day trading and trading, is it the same?
Yeah, good question. It depends a little on the market that you're trading. If you're, for example, if you're trading US stocks, you need a certain amount of money to get past the pattern day trading rule. In Australia, we don't have that rule, so it doesn't really matter. However, in Australia, if you're buying and selling stocks, there's a minimum trade size, so you can only buy and sell $500 of a stock or more at a time. So you can't, start with a really tiny capital because it doesn't work. The other challenge is with trading, the people typically overestimate the returns. Someone new to trading might think, oh, I could make, 100% return on my money every month and, really grow, but you can't do that. It's just not practical. And so if you're only trading with a couple of $1,000, all of the effort that you put in, you only make a very small amount of money in dollar terms. So it's kind of not really worth the effort. I typically say for most people, you need 25, $30,000 to really start. I mean, you can start with less than that if you're doing a very long-term, slow approach. But if you want to diversify and have a few different strategies going to reduce your risk and smooth your returns, then that's about the level that you need to start.
Would you advise paper trading before starting?
Yeah, I mean, there's a couple of things that you need to do before starting to trade. It's first of all, acknowledge that trading is not easy. We look at the markets and we think, oh, look, there's a big move. I would have bought there. I would have sold there. I would have made a ton of money. I'm smart. I'll figure this out, right? And because it's easy to start trading mechanically, all you have to do is open a brokerage account, put some money in it, press buy and sell. There's a very low barrier to entry. Often people mistake low barrier to entry with easy, and it's just not true. So the first thing we've got to do is actually learn some trading strategies that work. If we just get in there and start buying and selling based on hunches, based on tips, based on Reddit, or X, we're not going to make money. You're going to lose money. So first of all, learn some strategies. Second of all, build confidence in those strategies. And for me, that comes through backtesting. Backtesting means you take the strategy and you apply it to historical data, and you see how it would have worked in the past, how it made money, how big the drawdowns were, how frequently it trades, all of those things, and really build confidence that you understand how the strategy is going to work. Then paper trade. to make sure you can do it in real time and you don't make mistakes, then deploy with real money. So it's kind of a multi-step process.
How do you deal with risk management?
Yeah, risk management is really the key to keeping you in the game. You know, this is it's a tough business. It's the hardest way to make easy money. I would say. People think trading is easy money, but it's really quite a tough competition. So risk management is what we need to do well in order to stay in the game long enough to learn how to be successful. So risk management means you got to make sure that you always survive. So no matter what happens in the markets, you've got to live to trade another day. That's the first principle because you have to be in the game in order to win the game. If we make 100% this year and lose 100% next year, all of our work is wasted because we've blown up and we've lost everything. So we need to make sure that we trade in a way that preserves our capital. So how do we do that? Well, we make sure that each individual trade is very small. So if we lose, we only lose a small percentage of our account. I'm talking 0.5 to 1% of our account on a loss. Yeah. If you're losing 5, 10, 15% of your account on a big loss, it's going to be you're going to end in disaster. You're going to blow up your account. You need to make sure that each trade only has a very small loss if you're wrong, and you allow the winners to grow. Yeah. So the first thing is keep your losses small. Second thing is make sure that you can profit from a range of different market conditions. You know, you want to be able to make money when the market goes up, when the market is sideways, and when the market is going down. And that means having different strategies and diversifying across different strategies. So if you do those two things, then you're a long way ahead. The next risk management mistake people make is by using a lot of leverage. People think, oh, yeah, if I can get 10 times leverage on my money or 5 times leverage on my money, I'll build my account quickly. And then once my account is big, I'll be a bit more cautious with my risk management. But that's a mistake because high leverage always ends in disaster and people blowing up their accounts. So keep your leverage at very low or just trade with cash when you're first learning, particularly, so that you can make sure that you learn the lessons and stay in the game.
In regards to strategies, do you use technical analysis or fundamental?
Yeah, I use purely technical. Both can work, technical analysis or fundamental analysis. The reason I use technical analysis is because I trade systematically, which means I have objective rules that tell me when to buy and when to sell. And with that sort of approach, you can test that strategy historically and see how it worked and really build confidence in it. With a fundamental approach, where you're looking at the company balance sheet and profit and loss and various macro factors and so on, it's very hard to test those sorts of strategies because you don't have all of that information historically to see when you would have entered and exited to prove your strategy actually works.
Talk to us about how important it is to control your emotions.
Look, emotions are probably one of the biggest enemies of trading and investing. As humans, we have a lot of impulses that just don't help in financial markets. We have fear, we have greed, anxiety, excitement, all of those sorts of emotions influence our decisions. If you look at a stock that's going through the roof and you're not holding that stock, all of a sudden you feel like you're missing out. And the impulse, the emotion is to jump in so that you don't miss out. You want to make money while everyone else is making money. But often by the time we feel that greed, and the fear of missing out, it's too late. And very frequently, if you act on emotion, you get in at the top and then you suffer, or you get out at the bottom and you miss out on the recovery. And I see this time and time again in my own impulses because I have emotions in my trading and I observe how I feel when I look at what the markets are doing. And if I acted on that, it would really cause a lot of problems. And so that's why I remove the emotions from the decision making and put objective rules in place to tell me when to buy and when to sell so that the emotions don't come into it. I can observe the emotions, but I act on the rules.
Are
Does that
you,
make sense?
yeah. Are you using AI?
Yeah, look, more and more. I use AI to help me generate new trading system ideas or trading strategy ideas. Um, I don't have like an AI kind of black box that does the trading for me. I think that's extremely dangerous. And I suspect that it's not quite there yet in terms of the sophistication and so on. Throughout history, there's been lots of different promises from software and the computing industry to revolutionize trading, trading black boxes, algos and bots, and now AI. But fundamentally, the way to make money trading is by having a set of rules that have an edge that has been proven and is stable long term. And often that means trading longer term than what you think. One of my favorite trading strategies is long-term trend following. Long-term trend following means you find stocks that are going up over many days, like a stock that makes a new 200-day high, for example. It's obviously going up and you buy it, and then you wait until it starts falling and it falls, say, 25% from its high. So the idea is you're getting in a stock that's going up and you're holding it until it really starts going down and you make profit in the middle, right? You don't need complicated AI and fancy bots to do that. It's a very simple strategy, but in many markets, it works extremely well, including the Australian market and Canadian market, for example.
What's one thing you wish you knew before uh,
Oh, there's a
before
few,
trading?
yeah, there's a few things. Before I started, it took me 3 years to get profitable when I first started. And this is a long time ago. I've been trading for over 25 years now. Um, I would say the number one thing that I wish I knew is that using a proven trading system or trading strategy that is objective, as in it takes the emotion away, is the quickest path to success. I tried when I first started, I tried fundamental analysis, I tried discretionary chart reading, I tried price action, I looked at candlesticks, I looked at all of the different indicators. I was spending hours and hours every single night analyzing the markets, looking at all of these different tools, trying to come up with a subjective decision of what I was going to do the next day. And I wasn't profitable. But as soon as I implemented my first trading system, which was a objective set of rules that told me exactly when to buy and exactly when to sell, my account went from doing this to doing that. Started making money. And if I'd have saved those 3 years, man, that's 3 years of compounding. 25 years later, that is humongous. The opportunity cost that I missed out on because it took me 3 years to learn. So I think that's probably the number one thing. And just for bonus, the number two thing is diversification. I traded one strategy on one market for way too long. If I had have traded international markets, traded multiple different strategies, and put them all into a portfolio together that was nice and diversified, I would have been far better off. That's what I do now, but it took me too many years to get to that point.
Do you think someone can make a living out of it, like replace their day job, the income, their 9 to 5 with trading?
Yes, you can. It's absolutely possible. Not in the way that most people think. Yeah, most people think, okay, I've got my trading capital. They're thinking, 20, 30, 50, 100 grand. They put into their account. I think, okay, if I can just make $500 a day, then I can replace my job and I can quit, right? Because most people are treating trading like a job. With a job, you go to work, you do the work, you get paid. The next day, you go to work, you do the work, you get paid. Yeah? So it's go to work, get paid, come home, go to sleep, and repeat. With trading, it's not like that. Because with trading, we can't force what the market gives us. The market will give us whatever it gives us that day. Some days we get paid, some days we pay the market. Some months we get paid, some months we pay the market. So in order to earn a living from trading, there's a couple of things you need to have in place. You need to have, first of all, sufficient capital. Now, that depends on what your lifestyle requirements are, but typically if you think you're gonna, maybe you're gonna make somewhere between 10 and 30% return per year if you're good and if you don't blow up, depending on your risk appetite, somewhere in that range. That means to make $100,000 salary income, depending on how much you want to earn, you need a fair bit. You need a fair bit of capital, right? You can't do it with $50,000 or $100,000. You've got to have a lot more capital than that. So first thing you need is capital. Second thing you need is a diversified portfolio of strategies so that you can make money in a range of different market conditions. Because if you only make money when the market's going up, you're going to only make money a very small percentage of the time because there's also sideways markets and there's bear markets. We want to make money more often. So you need a range of different strategies, and preferably you need to diversify over several different markets so that you're not reliant on just, the whims of one particular market.
Why do you think people fail in that area in regards to trading?
Oh, look, so many reasons. I mean, I think the biggest one is they let their emotions, particularly greed, take over, and they try and rush it. You've got a small amount of money. I want to make a lot of money quickly, use a lot of leverage, take a lot of risk, and then they blow up. So that's one thing. Second thing is not having a strategy that actually works. I mean, I've got a whole lot of trading books over here, and there's many strategies in them, and most of them are garbage. Most of them just don't work or don't work anymore. So the key to long-term success is having good risk management, so you stay in the game, and then having strategies that are stable and robust, and they work. And in order to do that, you have to test those strategies for yourself and make sure that they're still working in the markets you trade. There's a lot of strategies that I learned in these books, and as the market has shifted over the years and rules change and exchange rule, the way the exchange operates changes, those strategies, many of them have eroded or become loss making. So you need to stay up to date and keep monitoring your strategies to make sure that they work.
Where can people learn more about you or follow you?
So the best place is enlightenedstocktrading.com, so my website. I think the best place to start, if you go to enlightenedstocktrading.com/free, I have some tools to help traders get started and stay in the game. So there's some cheat sheets to help you manage your risk, have a daily trading process that works, and eliminate trading mistakes that will get you a lot of the way there. There's 2 ebooks about how to build confidence in your trading and diversify internationally. And then there's a couple of free courses. So I think that's probably the best way. And then once you register for that, you'll have my email and you can reply via email, and I can help you out that way.